Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is March 17th. Happy St. Patrick's Day. Hope you guys are having an awesome day. I am ready. We've got our stock traders meeting tonight, which is super exciting. It's when do we do this? We do it the third Tuesday every month. I get together with my local friends. There's probably about 12 to 15 people coming tonight. It's going to be amazing. So I always love to get together with people and just, share some beer over stock trading. That's what I want to do. So if you guys are into that, if you like beer, leave me a like, because I like beer. Are we drinking Guinness today? I hope so. We're gonna have some green beer at the pub later today. Markets are up, portfolio's up. My sign is green. I've got my chain on for St. Patty's Day. We're ready to go. So hopefully you guys are having a fun time. I was having a bit of a hard time loading the chat today, so I hope it's working. It looks like it is, but let me know in the chat if you can hear me. That would be fantastic. And I see we've got a couple of viewers online, and let me know what stocks you want to take a look at. We're going to take a look at everything today. As always, not financial advice in any way, shape, or form, just what I'm looking at, what I am doing. So let's go over to the screen and take a look. Drawbridge Finance AI picks continue to outperform the market. You look at the year to date on the S&P 500. So far in 2026, it's down 1.67%. The Drawbridge Finance AI picks are up 8.49%. If you guys are ever interested in seeing this, updates live on my website. So since inception last May, up 39.7%. Very, very easy to follow. Single day of trading per year. So we're halfway through, single day of trading per month, halfway through the month of March so far. Portfolio relatively flat, positive at 0.13%. Monthly return on the SPY down negative 2.7%. So cumulatively since inception, 39.67%. And the year to date here, we've had a fantastic January, obviously. February was still very good at 1.8% return compared to SPY's negative 1.3%. And now this month, again, outperforming the SPY. So 9 out of 11 months, I've outperformed the SPY. Very simple. I'm using AI to help me pick stocks. I build a basket of portfolio. I put it out. I buy it on the first day of the month. It's super, super simple. And it has been wildly outperforming, which is fantastic. Let's just talk about, so everybody likes to show results and talk about like how they're doing and what they're doing. Let me just load up my screen here. You guys can see. Maybe we're not going to do it. Maybe it's not going to load up right this second, but I'll get that to try to load, and if it will, it's because I'm connected on my other computer. I'll show you the results, but we're up. I'm up just over 9% overall portfolio this year, which has been fantastic. I mean, what a great way to start the year. Let's get into what's going on in the market and take a look at everything going on there. So looking at the SPX, I've added a new little fun potential trigger on. I'm always looking for indicators to show kind of what market direction is. And you can see there's like a cluster of selling happening here on this new indicator that I built, which is kind of fun. But SPX, let's take a look. It's at 67.28, up 0.43% today. We're definitely in that range inside of these Bollinger Bands. We're above VWAP. Point of control is well above 68.20. We've got more recent point of control. So that's what we're looking at. Are we going to see some sideways chop? My expectation is yes. So that is what I'm playing for. NQ up. Again, we bounced off the VWAP. We actually pulled that back below it, but we're inside this Bollinger Band that's definitely getting tighter and tighter and tighter. Point of control at 25,620, currently marking at 25,000. So we're 600 points below point of control, but a nice big green day today. And that's why most people's portfolios are up. I'm a neutral trader, so I don't care which way the market goes. We can play any market, anytime. VIX has been coming down. So for my members in the Discord chat have been killing it this week. When the volatility gets so high, I get into trades where I'm just putting on 7-day to expiration condors and putting those on every single day. I'm going to show you guys an adjustment before we get into anything else. One of the things that people do with their condors often is there's a certain point that what happens with the condor is that the the risk starts to outweigh the potential reward, or the the reward is like we're trying to make 50 bucks and we've got $1,000 of risk on a $10 wide, and it just doesn't make sense to do that. So let me pull up my actual rolling options record keeper. I'm going to show you exactly the type of adjustment that I do, and so that you can kind of understand my thinking as a neutral investor. So let me just pull this. We're ready here. We're going to take a look at, close that. Okay. So this is an actual trade that I put on last week. So this was alerted in my chat room. This was March 10th. So exactly 7 days ago, and it expires today. So what I did was I sold a condor. Very, very simple. I didn't do a lot of contracts. These are pretty high risk. When we build a condor, we have an outsized amount of risk. So you can see this, the long put's at 64.90, short put is at 6,500. That means it could cost me up to $10 to close the put side of this trade per contract. On the call side, I've got 7,000 strike, and then I've got the 710 long call. That also is $10 wide, which means I could pay potentially up to $10 to close this if the market went up too much. Now, at the time that I put this on, the SPX was marking at 68.18. I didn't expect it to drop below 6,500, and I didn't think it was going to go above 7,000 over the course of the next 7 days between March 10th and March 17th. So this is a 7-day trade. By taking this risk, I was able to collect $145 per contract. So I did 3 of them, and you'll see what my total credit was. So it's not massive. I got 435 bucks credited to my account that day. Well, let's take a look at what the risk profile was on that first day. So here, there's a couple of lines on this chart, and you'll see the blue line is my initial condor. That's the condor March 17th, the 64.90, the 6,500, 7,000, and 70.10. And I just want to make sure that I hope I'm working. I hope you guys can see me. They've got 9 people watching, so let me know. Somebody say in the chat that you can hear me and you can watch me and following along, because otherwise I'm just talking to myself, which is never fun. I want to talk to you guys, especially on a day like today. Okay, so that was the condor, and when we look at this chart in my rolling options record keeper, it shows me I can make a profit of 435 bucks if I hold this to expiration. But I also have some risk on. This trade has a risk of $2,565 of potential cost. Could cost me $3,000 to close this trade, 3 tranches, $10 wide, $3,000 debit, minus the $435 credit that I collected. That's where we end up with this max loss, $2,565. I also could lose a little bit more than that because I could actually lose on commissions as well. And the commissions can be a little bit hefty on these. I paid $15.49 in commissions to open this trade. Now, what happened with this? Well, 6 days later, and this took a while, the market was volatile all week last week, and I was putting these trades on every single day. I was putting on a 7-day to expiration condor. All of them I was able to adjust yesterday, finally, after the weekend. So on March 16th, the market had moved down 100 points. We had gone from 68.18 to 67.08, but it hadn't moved that massive amount down to 6,500, so we're still very much in the range. And what did I do? Well, I actually bought an inverse condor inside of that. So let's just ignore what was already on. So I'm gonna cross out what was on here, okay, if that makes sense, because that just carries over, and you guys know how my Rourke works. We just carry those values over into the adjustment column. This was the new trade that I put on. So I purchased the 65.30 and I sold a 65.20. Now you'll note that a typical iron condor, the short is usually at a higher strike than the long put. But in this case, this is at a lower strike. What this means is that if the market was to drop down below 65.20, then I would actually be collecting $10 per credit, or $1,000 for this trade. So I would be able to collect $1,000 if the market dropped below 65.20. On the call side, I bought a 69.30, and then at a higher strike, I sold the 69.40. So this is a bullish position. This one also means that if the market was to rally quite heavily and was trading above 69.40, that I would get to close this for a credit of $10 or $1,000. this whole thing cost me 50 cents per contract. So remember, I collected $1.45 and I paid 50 cents. Now this is a typical way of closing. Like the way we trade iron condors in general is we collect an amount of money as the condor, if it is a winning trade, as that value drops over time, or as the volatility falls out, which is what was happening this week, volatility is dropping, the price to buy it back gets lower and lower and lower and lower. And eventually it becomes zero and becomes worthless and it expires. But holding a condor close to expiration means that we are taking on huge gamma risk in a move that is massive. We could go from something that is very, very low to buy out to very, very costly to buy out. So I could just lose $3,000 kind of instantaneously. Fine if I'm only putting on one at a time, but I was putting these on every single day. I was like layering these on. So, when you have multiple on, all of a sudden, you have a $40,000 or $50,000 position on. I don't want that. I don't want $50,000 worth of risk that all expires, one day after another, because if we get an excessive move, this can be devastating. As the volatility comes down, our condors are getting tighter and tighter and tighter as well. So let's go back to this. So see what happens is because I put on this inverse condor, that's what I added, and I added it for 50 cents. Instead of just closing the trade and removing it completely, it left me in a position where now I have effectively a free trade on. It doesn't matter where we go at this point. We've got I've collected $285 in credit. And I now have a risk-free trade. These are cash settled. So if the market all of a sudden tomorrow opened up at 7,200, now I don't expect that that's going to happen. But if it did, these would cash settle, and I would have a $10 credit and a $10 debit automatically done in my account, and my brokerage, I would have made $285 profit. So this becomes a risk-free trade. Rather than eliminating it completely by closing it, I'm converting it to a risk-free trade. Why might I do that? Well, you just look at the chart. Like, look at what my potential is. What happens if we wake up tomorrow and there's been like a massive rally and the market is trading at 69.50? Well, if that happens tomorrow, this trade makes $3,285. I took a trade that was a winner, and instead of closing it and being like, okay, that was great, I converted it into something that can be a massive, massive lotto ticket. Nathan says, love the hat. Thank you so much. Mike says, good afternoon, Levi. Happy to make it out this week. Yeah, thank you for joining. Is my hat on backwards? Is it supposed to be this way? This is a crazy hat. It's like, I don't know what it's supposed to look like. Anyways, it's fun. We're gonna drink some beer later, I'm sure. Okay, I love St. Paddy's Day. Fingers crossed we close green on St. Paddy's Day. Yes, absolutely, right? Okay, so can you guys type something in the chat? Does this make sense? Does this type of adjustment make sense to you? That why I would, rather than just close it and take off all of my potential, I'm actually converting it into something that still has potential. That's what I'm doing. And when you do this multiple times, so that was on my March 10th trade. And then if we looked at my March 11th trade, it was the same sort of thing. I did this rate at 50%. So I did the 130 credit and then 65 cents to add that second condor. This one was a little bit tighter, but again, same sort of thing. I end up with a risk-free trade. The March 12th trade, same thing. And you can see each of these times, like I'm leaving myself with a lotto ticket. This March 11th, I mean, I went from having a risk of $4,300 to having the potential of making $5,000. And it's still in play. We don't know. So any of these days could happen. So these ones expire March 18th. So that's tomorrow. So fingers crossed, but it's not. I don't expect it to happen. I'm just removing my risk. I'm being a systematic trader, and that's exactly what I'm doing. Okay, let's go back to taking a look at the market. And so we're talking about VIX 22 handle. So we're in this range. When we get above this green line, extremely high VIX, we have to have conviction and put on trades. That's why I was putting on condors every single day. I don't know if I want to continue putting these on if they get too low. 20 is kind of my sweet spot. If the VIX is below 20, I will not put on any more condors. I did put one on today. So if you guys are ever interested in the details and you want to know exactly what I'm putting on, You can become a member of the Drawbridge Traders Club. You can head over to Discord, and we're chatting. There's a free chat over there too, so you can look at the link. You can come over and chat with me there. Watch out for scammers, by the way. I don't usually reach out via DM, so there will be people scamming, trying to get you to sign up for something, but I only sell drawbridgefinance.ca. You can go to Patreon, you can go to WAP, but my website has all of the direct links, or you can read the description of my videos and you can get over there directly, or from my Discord. But don't respond to the scammers that are impersonating me on Discord, unfortunately. Mike's asking, general question for you. How do you feel about far out of the money long puts for volume hedging? Not great for slow delta moves down, but more to hedge against volatility. You know, it's interesting. I was having this conversation this morning about it in my chat room. I don't love long puts for volatility hedging. The reason is that we have to go too low. If we look, I'm just going to pull up some of the chat from this morning in my free chat room, but I'm going to pull up this image right here. Where was that? Let me just, it's in the chat room, but I'm going to pull up the actual image that I posted from this morning. When was that? 8:46. So I'll pull it up exactly. We're going to look at where someone might, bear with me 1 second. It's just about there. We'll just look at like ES. We'll look at ES. So this was from this morning in my chat room, just talking about ES and like where I might be placing my hedge, because a lot of people have watched my Black Swan hedge tracker video, and they're looking at like $3 premium. Well, $3 premium, if you were to collect $3 premium right now, that's the 2,700 level on ES. ES right now is trading at 67.71. So if we were to sell something for $3, the way my Black Swan hedge video that I made, 3 years ago now, is laid out, the ES wasn't trading this high. It just wasn't trading at these valuations. But 67.70 to 2,700, that is like a crazy huge drop, right? Like that is a 60% drop. Let's pull up a chart of, because this is also something I posted in my chat room this morning, of like how big the drops were. If we look at how big the drops were in different years. Now, in 1987, we saw 22% drop in one day, which was bonkers, right? Obviously, like the biggest move of all time in modern stock market. 1990, we had 20% drop. It took 3 months, right? 3 months. 1998, 20% drop, 2 months. In 2000 to 2002, this took 22 months. It basically took 2 years for the market to drop 50%. This drawdown, 57%, took 17 months, so over a year. These are slow grind downs. 2020, obviously COVID, 1 month, 34% down. 2022, this was another grind down year with 23% reduction, 6 months it took. We don't know how far this drop is going to be. We don't know if we're at the bottom or not in 2026. And how long has it been? You know, it's already started back in November. So we're 4 months into this retrace. Let's pull up the chart just so you can see kind of what I'm talking about. Let's look at SPX and say, you know, if we were to mark the highs on here, where was the high? It was in January. So we're not even, we had new highs in January, right there, January 28th. And that is the highest point the market has been. And so I guess we're not 4 months. You know, I was looking at it from here because I think NQ, if we go to NQ, yeah, the high was back in end of October in NASDAQ. We didn't actually get up to all-time highs in January, but on SPX we did. So it depends on what index you're looking at. Russell's high was in January as well. So it depends on where you're looking, which index you're tracking. But SPX, so we're from the high of January, we're now a month and a half in. Now, how far down are we? What was this drawdown? Well, from the high, let me just make sure I'm absolutely correct here. The 28th. From that high, we're basically at 7,000 level. and we're now come down to 66.36. Well, if I pull up my calculator, how far down is that move? Let's say a $400 move divided by 7,000. We're at 5.7% drawdown. That's it so far. So it is not that crazy yet. We could go down considerably more. We may not. We may have hit it already. We just don't know. We could have a repeat of last April where we saw, a fairly substantial drawdown. Yeah. So peak to trough, where are we going? When we look, let's go back to this chain now. So when we look at this chain, and I am looking, and I get this question all the time, like selling a $3 put or buying a $3 put. I mean, 2,700 level compared to 67.70. This is less than half. This is like a 60% drawdown. And we're talking about over the next 105 days. This is 3 months. There's such a small chance that this is going to happen. Let's clear off some of this for a second. Look at the delta. Like there's a 0% chance that we're going to be at 3,400 level. And I often get asked about like, well, where can we trade these that they're $50 wide spreads? Well, this is the range from 3,600 down to about 50. So this is looking at like 5 delta. There's only a 5% chance that we're going to be down as low as 50.50, which is still a substantial move down from where we are at that 67.70. Let's pull up that calculator again and just do a little more math to see how big that would be. What screen was I on? Too many screens. Let's get my calculator going here. Let's say that the market dropped from the total value today, we'll call it 67.70, and then minus 50.50. And that's going to be a move of 17.20. We divide that by 67.70, and that's a 25% move. So there's a 5% chance that we could have a 25% move to the downside, which would result in a 30% total move from the highs. And when we look at that option chain, this is expensive right now to buy a put that's realistically going to make us some money. This is $3,000 position. Actually, it's not. This is on ES, so this is only a $1,500 position. But by buying this out here, it's expensive, like throwing $1,500. What I do in times like this is I put on limited loss trades. I just hedge all of my pieces. I also, as the people in my trading group know, I'm short the NASDAQ right now. I'm short S&P 500. I actually have short shares in SPY and short in NQ, and I've actually held short shares in those since last May, which is crazy. So then during this run up, I've actually made money with options trading against my short shares, which have been losing money. And I'm net positive on both those positions, even though we've been in a bull move. That being short those shares helps considerably the downside protection in my account. It's wild what you can do by just shorting shares. Mike said, was watching a video that said they were way more efficient than elaborate setups like Sweet Bobby's 3-to-1 ratio hedge. And then all in one's asking, do you have your Black Swan hedge in a different account? So I do not run Black Swan hedges anymore. I'm Canadian. The Valley of Death, and this is why I was specifically talking about this particular thing. If we trade down here, 3,600, in order for the market to get to this 3,600 level, which is where these really start making a ton of money, where they actually are making lots of money to really protect the hedge, the market has already dropped half its value. So the Valley of Death is huge. If I was going to be buying hedges, I would be buying them at this like 5 delta. That's where I would be buying. But sadly, this is where like a lot of people sell. They'll sell spreads down here at this 5 delta, and they think they're safe. And when that is a huge risk, it would be much better to be a buyer of 5 delta than seller. But the drag is there. That's why people like Sweet Bobby do the 3 to 5, and Ron Bertino, who invented that trade, the 3 to 5 Black Swan hedge trade. They are excellent trades. Part of what makes them work is that they have a decay factor that it doesn't cost you anything. You're basically constantly breaking even all the time. Otherwise, any hedge that you buy, say you just bought 5 delta puts, you bought 5 delta put on ES every 90 days, well, that would be $1,500 or $6,000 a year. Well, for $6,000 a year, I mean, that's a vacation. You know, is it really providing that much protection? We're talking about something that's a 95% move. When volatility gets high, put on limited loss trades like iron condors. What traders should consider, and this is where I've altered my whole trading plan, I have said I will put on limited loss trades to the downside, and they're all protected individually. Each one has a maximum loss. Now that maximum loss could still be big. I'm not saying that it's nothing. You know, I could still risk $100,000 if I want on a single trade, but I have some sort of put in there as a calculation to cushion. That's all I'm asking my hedges to do, is cushion the downside. But part of the reason I'm up this year is because we've been putting on trades that have building diagonal trades that account for a potential drift down like we saw in 2022. And I continue to put those on. They're expensive when the VIX is high. I put one on today, another hedge. They're expensive to put on in these markets. So I don't expect to make a huge amount of money, but I don't want them to be a drain on my account either. Now, do I have Black Swan hedge protection? My Black Swan hedge protection comes from the fact that I am short, literally short shares, but I would still take a substantial hit on my account. These are the weighting that we have to do. If we go delta neutral all the time, if we just go 100% flat on our portfolio, we make no money. There's this like zero-sum game that some people claim that options are. We have to have some directional bias in order to make money, because the market makers price everything to perfection. So what you were showing and talking about makes sense for a price drop, but I'm just asking about those quick, sudden volatility spikes. Yeah, I mean, they happen, and it just becomes a timing thing. So if you can put them on and they don't cost a lot of money, I find that when I've tried it in the past, when I've had these on, they end up just being, if they're not losing, then I'm okay. But most of the time they just end up costing me money. Simple is better, obviously. I mean, just buying a put every once in a while. And you could do that. You can just be like, okay, I really have this gut feeling that right now there's a potential in the market going down. Usually when that feeling happens, the market's already pricing that action in, unfortunately. So how do you short shares? Lori's asking, how do you short shares? I just sell the shares. I just go in my IBKR account and I sell them, and I get paid a credit I get paid that money into my account as a credit, and I am then short those shares. That's it. It's a very simple transaction. I have to cover the dividends. Like, I pay out the dividend that NQ pays. Or not NQ, sorry, QQQ or SPY. But I feel like that's a better, more robust way to hedge, and I trade those weekly. I do have a valley too, but my valley is very, very tight to where the trading is. So I play an adjusted game all the time, and I play on the edge of having a potential couple $1,000 loss every single week, because I don't want to have a constant loss that I know I'm just throwing $1,500 for something that's way, way too low. I don't want my hedges to start paying me when the market's down 25%. But I keep my profit profile pretty neutral. So I have short calls above as well. And those have been quite successful. The market has been grinding up, and overall, when I look at those short calls selling, it's actually been positive. So it's been fantastic. What other stocks do you guys want to look at? Do you want to look at some in particular? We've got 16 viewers online. I've got a couple of likes so far. How many likes do we have? 5 likes. You guys are amazing. And thanks for joining me on this St. Paddy's Day. Let's take a look at some of the major market, just run through some of these things. We'll talk about oil. It's at $96 a barrel. Very, very high. I was thinking about going back and talking about, like, pulling out the excerpts of my videos, because every week when I talk about oil, I always say, oh, you know, if war ever breaks out, oil could go to $100 a barrel. And look at how quickly it happened. Like, we went from February 27th, we were at the, $64 a barrel, $66 a barrel, and we went to $118 on March 9th. So it was just extremely fast move, and that is the way that oil moves. Gold has been grinding up. It's pretty interesting actually what has happened here, because we're getting inside of some of these channels. It has just been, and this is why I keep these types of indicators on, where we can see this kind of blue expansion and how it's been trading inside of this range. VWAP is way down here. Point of control at $5,118. We're at $5,000 right now. Silver, I have been saying for a while, I think we were overextended. We were outside of this range, and we're starting to see this, obviously VWAP continues to move up, but it's getting into a better range now, which is good. It's interesting how it can trade sideways and then come into a range. Can you guys, if we're not going to talk about stocks, yeah, let's talk about RBRK. Yeah, every fiber in my body told me to buy oil futures with the tensions mounted, and I didn't do it. You know what? Me too. We're sitting there like, I had a couple positions on that I made some money on, but I did not make enough on this oil move. And even now, like, should we be putting on some put spreads, like at the 55-51 put spread, like a 400 point wide spread on just CL futures out 3 months? Like, is that a smart trade? Like, are the oil prices going to come down below $60 a barrel? We can trade quite low and still make an okay premium as if we use a put credit spread. So something to consider. I'm not looking for diagonals in this market though. Like, it has to be some sort of same expiration date. Because the volatility is so high, so I have to be watching my risk to reward. Can I get enough risk to reward? I'd be playing on the lower side, and I'd probably be taking an outsized risk, not typical. Like, if I was doing a put spread normally, I would look for 1/3 the credit of the width. So if I was doing $10, I'd want to collect $3.33. But I would rather be lower and take a bigger risk and say, you know what if I only make 15% on this trade? If on a $10 spread, I make $150, or sorry, $1.50 on a $10 spread, that's the kind of premium I might be looking to collect and moving that down. The other thing I could do is have a bigger risk like that and then put on, buy some really tight little contracts in that 60 range. Because if we do come down, we should not drop below 60. Historically, that's been a pretty good level. But yeah, sorry, I hope somebody made some money off oil. I mean, I made a little bit. I had some COP positions that made some money, but that was really it. Apple coming down, just like look at where we are relative to the VWAP. So watching this long-term trend line, point of controls at 272, it's currently marking at 254. Just everything is just trading right in this nice range. There's a long signal here on the Bollinger Band that it doesn't necessarily mean it's going to bounce up right away, but these typically, if you watch this blue entry and this purple exit, this can be a very, very lucrative strategy playing the VWAP. The Bollinger Band. The VWAP, I think, is a stronger metric. Something I would be looking at. If Apple touches here, I may go long Apple, but I'm currently sitting fairly neutral in Apple. And TDT continues to grind down. AMD, just look at the squeeze that's occurring here. So right around that VWAP, we hit it, we touched it, and then this Bollinger Band just tightening down. If we get compression like this, when the market trades in this kind of manner, the moves that occur are usually quite massive when they break out. So you can see that happened before. We had a wider range. We saw this consolidation, sideways. And then this was just in January. We see just move pre-earnings, just boom, blast up here. Then we, extreme movement after consolidation phases. So how long is this going to be? Well, often you can kind of see it, you can like look, and there's the consolidation phase. So if I was to draw a rectangle, it was exactly the same size. Try to approximate it here. It's about that width, right? I could measure it specifically, but there I am. Like we're getting close to a move to one side or the other. Which way is the move? Point of control is above. AMD, I think, is a strong company. I actually think that when these are going to move, it's going to move to the upside. It's not going to be that extreme. You know, move could be here. And so that's how I might target those trades. Just, you know, as we're looking at things. Amazon got an upgrade today. Again, looking at that VWAP, where are we? We can talk about these consolidation phases. We saw consolidation, we saw a move, we saw another consolidation, we saw a move, we saw a consolidation, we saw a move. These kind of happen. This is what happens. We see a move, we see some consolidation. Where's the next move? I think for Amazon, it's back up to 232. I think it's above this VWAP level. This is where I think that the Amazon is a great company because they're not going to be really affected by AI except in a positive way, you know. He says, Mike, with practice, you'll begin to trust your intuition. Well, yeah, is that what happens? I don't know. I've been doing this 30 years, and sometimes I'm like, I have intuition about stuff, and I still don't make the moves. I don't know. You know, gut feeling is a great thing, but I definitely trade by the numbers more often than I trade by gut feeling, and you know, because yeah. That oil spike was life-changing money. I know that's the hard part, isn't it? Okay, we skipped over Nathan's question. I'm sorry. We got it started talking. Let's look at RBRK and take a look at what is going on there before we get too far into this. RBRK. So rubric, we're at $52 or something right now, right? 50. What are we trading at? Why do they make it so small on TradingView? 52.29. It's way up here. Like I can barely see that on this big screen that I'm staring down into. So I've got a couple of indicators on here. Obviously, one being this VWAP, which I talk about quite consistently. That is, oh, wrong button. Sorry. This is the VWAP right here. This blue line that kind of goes through the middle. And then off the VWAP, we have some standard deviation. That's this kind of outer kind of shaded area we're looking at. Then there's this little Bollinger Band, and I have a Bollinger Band strategy on where it would signal me when we're touching the Bollinger Band to go either long or short. Now, I built another custom indicator that I've added to this, and this is actually just showing me the trend and saying, hey, these are times where I might want to go short. These red arrows, short. We're still getting those. So even though and this indicator is built on like a TTM squeeze, so we're looking for value. So we're looking at price to earnings basically with TTM squeeze. And it's basically just allowing me to visualize what we already have down here and saying, is this a good time to go long relative to the amount of money that the stock is making, the company is making? And in this case, when we look at this, the trend is to the downside, and it's not yet at a good valuation to buy. Doesn't mean that we don't have some upside potential. It just means that I wouldn't be going super long. It also means that I don't mind, holding some upside risk against these. Now, a company like Rubric can go way up. So I want to do limited loss trades if I'm going to sell call spreads. I don't sell these as naked calls. I would sell them as call spreads because if the move happens, you can see in the past, went from $71 to $93. And as Mike said, this is kind of life-changing, that's kind of life-changing money. If you've got a $7,000 investment that goes to $9,000, that's a big move. Subsequently, it's a big move from $9,000 down to $5,000. This is a 40% drop that we've seen on the stock. So not all stocks are equal, and we have to kind of look at that in context. Point of control right now is $70. VWAP is around 76. So even though we're getting these red indicators, we're also seeing something else happening, and that is this compression of this Bollinger Band. We can see how tight it's gotten. So I've drawn those two arrows there. We're looking at this line now. This is the upper portion of this band. See how it's getting tighter, and the bottom portion of the same range it's getting tighter. And we talked about that just earlier here. We talked about when we get into a consolidation phase like this, and this compression happens, when a move occurs, it could be pretty fast. So when I look at this and I go, VWAP is above, the point of control is above, we're in a consolidation phase, the trend is down, we're inside of the standard deviations off the VWAP, I look at this as a bullish potential. I don't want to play naked shorts above, and that's what I'm looking for. Move to the upside. But I still want to make money daily off this. So then, selling premium makes sense in this case. So buying stock in Rubrick's case, I own stock and then I just sell covered calls against it. It's very simple strategy, buying when the opportunity is right and where we can see some potential and still make some money. Lori says your subconscious knows everything. I need to get in with you, Lori. Let's tap into my subconscious and tell me what I know, because that would be amazing if you could just be like, I see this. Who sees a crash coming? Are we worried about an April drop right now? A substantial April drop? I know Mike's asking about Black Swan events. I've had a couple people reach out this morning, just this morning. I can tell by the number of sales I make of my Black Swan tracker, how many people are buying that particular tracker in order to try to protect their account. So there's fear out there for sure. The fear index is high, volatility is high. You typically, when the VIX is high, this is the worst time to buy puts because it's super expensive. And so you learned it in your remote viewing class. That is, maybe I should go. My wife Karine goes to meditation. It's Tuesday actually. She's going to meditation tonight with a bunch of other women that she loves. I've never done those kind of things. I do a little bit of meditation myself, but I've never done like remote viewing. Maybe I need to tap into that. There also is, they often say that statistically women make better traders than men, which is like unfortunate because like my audience is like 99% male, and same with our like trading group and everything. It's like men want to do it, and then women typically are better traders. And I don't know, I think there's something there with intuition or stock reading or where chart reading or whatever it is. You're asking about my anchor, if this is an anchored VWAP. It is not. This is I'll show you the setting here. This is a which one is it? Turn that one off. No. Bollinger Band strategy. Bollinger. Got too many on here. It's telling me I need an update. What do you mean? Shouldn't need an update. Okay, I'm not sure. I'm not sure which one it is. It's not the visible. This visible range is the one on the right. I don't adjust these. I'm gonna have to get back to you on that. I don't know. It's one of those. You guys saw what I have on there, but this is not an anchored VWAP. This is it's just like a trend following. So we can see kind of how it functions on there, but it's not anchored. It's more like a simple moving average with a band to the outside. Rounding top. Yeah. Nathan says, awesome. Thanks. Yeah, you're very welcome, Nathan. That's that's my 2 cents on it. That's what I'm looking at. It takes practice. Well, I hope you've mastered it. Tell me, Lori, what stock, what do you think is going on in the market? Where do you think we can pin these SPX trades? I mean, I've got one right now that expires later this week at that 67.70 level, which, this is just getting so close to a 50-point move to the upside. And I'm going to have another pin. I've pinned like 3 this year so far, which is part of the reason why I'm having such outsized returns. So if we drift up just ever so slightly the rest of this week, that would be perfect for me. But I would love to know if you guys think that we're going to see these, 6,200 level again, because it's expensive to put on trades right now in these levels, but if it's going to go down there, we should be getting in front of it now. And then the rounding top, absolutely. From a technical perspective, we're definitely seeing that rounding top. We see the Japanese, for those of you who follow some of the Japanese terminology, we see this rounding top. And the question is, how fast does it come down? Because last year, were we really in a rounding top? It was, we didn't really get a rounding top, right? This, if you look at the shape, I'm just going to draw a line on here the best I can with my mouse. But if we look at this shape, okay, maybe I'll just do it this way with some, so relatively straight kind of through here, right? And then all of a sudden we're like, that, it was a huge move. Whereas this is more in line with what Lori is saying, is like a rounding top. So the question is, you know, if that's the line, are we going to continue this line? Like, does it come out like this and come down? Or do we just have a straight down like we did last year? Or is it even flatter? Do we see kind of more like this motion? I don't really expect a lot from the S&P 500 and the NQ this year. I don't expect a huge amount of upside. So these are the kind of potential trajectories that I'm looking at SPX and saying, okay, well, where, you know, we could come up here, but I don't think we're going to go too high. We could kind of go down. We're definitely going to see some choppiness no matter what happens. We could see a dip and then raise back up. What do you guys think is the most likely scenario on these? Let's just draw 3 lines. So this is going to be line 1. This is going to be line 2. And then this is going to be line 3. I'm not even giving an upper choice. I don't even think that even exists right now. And I could be totally wrong. But so if we number these, you guys are going to type in the chat. So this one is number 1. This one is number 2. And then let's see if we can get a group consensus. And number 3, just type 1, 2, or 3 in the chat, which direction you think. And then I'll build a trade. We'll build a trade right off of this. So, Mike says my messages aren't showing up for some reason. Can we look at Intel INTC? I hit my linear regression scanner today and didn't get to look at it. I will take a look right now. Lori says I haven't mastered it yet. Me neither, Lori. We're all in the same boat. 30 years, and I'm like, I don't know which way the market's going. You know, I'm guessing 1, 2, and 3. We got Easy Money says 1. I appreciate that insight. They make me scared. Mike says 3. I'm more inclined, but somewhere in that 2 to 3 range. I actually think we're going to be in the 3 range for the summer. That would be my indication, is that we won't break over that 7,000 level, and that we'll continue to trade sideways for the next couple of months. What that will do is it will really create that rounded top. Then in the fall, now we get into like midterm election territory, then I think the market may rip up. But I don't think we're going to see as an extreme a move as we saw last year. But this is great, where we see people saying, you know, what they think. So Laurie says 2. Nathan says 2.5. Mike says 3. Easy Money says 1. So, and again, I know this isn't a big subset. There's only 20 people online, but it's good to kind of look. Does anybody think it's going to go up? Are we going to see SPX above 7,000 before the end of the summer? You know, because if we don't think that's going to happen, then why do we even bother putting on trades? Let's just load up option strat here. Yeah, Lori says no. I agree. So let's go to build. Let's go to like a double diagonal. Now the VIX is high right now. So when we talk about diagonals and condors, when the VIX is high, what we want to do is build trades that function well in high volatility. So high volatility trades are like iron butterflies, iron condors, put butterflies, call butterflies, things like that, things that are spreads. Debit spreads can work very well. We can also play credit spreads or directional trades. If I was to highlight like what is a good, I'm not trying to do that. Let's go to the build here. If I was to highlight trades that I consider to be good, high volatility trades, then those are all high volatility trades. Those are, and then ratio spreads, like the high volatility is great because so many of them work well. We've got income trades like a covered short strangle or straddle, these short calls, ladders, like everything is high volatility, and we just don't get it often enough. We've got ratio spreads. So that's pretty well it. Now let's look at what doesn't work in high volatility. Calendar spreads, harder. They still do work, but they're hard. Double diagonals. Now these are some of my favorite trades. You know, I love a double diagonal. Let's go back to that. You guys can screen grab that if you like. Those are the trades that are high IV. The problem is the moves hurt a lot of these. I don't want to be selling short puts in this market, not where we're sitting. When we look at a trading view and we look at all of these different stocks, I'm just going to scrub through a few of these. Look at how many red arrows are on these screens. So the red specifically are times where we may want to consider going short. So I'm just going to scrub through. So in this last little while, AMD, ton of red. ARKK, Adobe, all we're seeing is red across the board. Amazon, we don't see any green arrows. Here we go. There's one. What is this? CARG, and we saw this green, and it corresponds with a big move to the upside. Now these indicators aren't everything, but they're just something to look at. We're drifting down here at Costco. You know, Costco, this is like, these are bulletproof kind of companies, you know, there's no AI risk in there. And then the oil companies, we're seeing those moves to the upside. Coin, this is Bitcoin related, right? So Bitcoin's having a move. CTRA, this is another oil play. So Circle, this is an internet company. You know, there's lots of green there. So there are some, this is Dell. There are some out here, but the majority of them are showing red. And like there's Robinhood, iBit, Google. You know, Google's been very, very strong, but it's showing a little bit of weakness right now. So how do we trade these? Well, it depends on the setup. So if I was to look at SPX and I wanted to put on a trade, say I wanted to do a double diagonal, which I love, you'll see how quickly these trades, say I'm down here at 65.50, which is not that far away. It's 200 points below where we're trading. You know, if I'm at 67, 65, these might be good trades to put on. The problem is if the volatility drops, it hurts these trades. If we slide this down, if we just drop that implied volatility, as it gets lower, these become bigger and bigger losers. So if the volatility really drops out, these can become losers. So it's hard to put these trades on. They're positive theta decay. They have a nice slope. If I was building trades like this, what I do is I often do them as a little ratio. These are both set up as calendars, but I'll just show you a little trick that I like to do, which is to make them like 3 on the downside and then 2 on the upside. And the reason I do this is because it gives me a little bit of short delta, more neutral delta right off out of the gate. So in this case, I can put on this trade, and this is where I was talking about like pinning. Can we get really, really close at expiration if this was March 24th? Now, the problem with this is this trade is big. This is a $15,000 trade, but it also could make $11,000. It's positive decay over the course of time. To make these cheaper, it's very simple. Just make them tighter. They create a valley of death, but much smaller trade. This is, you know, max loss of $8,600, and this volatility could drop, and it could hurt this trade. But if the volatility drops, it means the market's going up. So it depends on the overall build of your portfolio overall. So I might put this trade on knowing that this is a hedge, because if the market drops, I know that volatility is expanding, and this has short delta and volatility expansion. So depending on the setup of the other positions, when you look at the overall delta of your portfolio, having a trade like this can function very, very well to try to protect. So this is what I would consider a hedge. Now I want to, you know, put this at a place where I'm pretty positive that we're not going to go. So I may put these even higher and build out a hedge like this. This is a 300 point wide hedge. It has short delta. That volatility expanding is nice. It has a fairly deep saddle though. So, and not a lot of positive theta decay. the tighter I can play this side, the faster the theta decay is going to be. So depending on where we want to go, it might be as simple as that. Short delta, we've got in a massive loss, I have to close this trade, but in a massive move, this has got volatility expansion. And look at how quickly that break even moves over. The break even 66 right now, and if IV explodes, like say we have, you know, 40 VIX, this trade hasn't lost very much money at all. If we saw a huge move, supposedly these just go to positive. And this is only a 3-day trade. So if the the average implied volatility went to 57, this trade would make $10,000 potentially. It is a calendar, so it has that potential. So I'm not worried about the downside on this. I'm actually worried about the upside. But as you saw, everybody's voting and we don't think the market's going to go up anyway. So those are the types of things I'm looking at. Mike says, okay, Mike says, in my experience, whatever I think will happen, happens exactly the opposite. Okay, we got to correct that thinking, Mike. Let's forward project positive returns and then actually make positive returns. That would be fantastic. And at the same time, you've fallen in love with double calendars. Are you also doing that 3 to 2? The reason I like the 3 to 2, let's just go back to the screen. The reason I like the 3 to 2, and you know, it could be anything. It could be 5 to 7 or whatever. Here, I'll show you guys another hedge. Like say you were playing these pretty big. Let's go to 5. 5 here. 5 shorts and then 5. And the reason I'm doing these is like a slightly different amount is because I'm adjusting the delta. I'm looking at the delta and saying, what do I want? This trade, as of right now, is positive delta. The slope is to the upside at this point in time. So in order for me to flatten this, I either have to add more to the downside or decrease the amount to the upside. So I would decrease this if I wanted to be more neutral, and then I could look at this and say, okay, so where did it go? I went the wrong way. So if I do 3 calendars above, well, now look at this slope here. That's what I'm looking at, slope. So 5 to 3 is one way to do it. Now, when the contracts get really big, sometimes it depends on how much they are. The bid on this is $6,000. So it's definitely not, it's going to hurt to put this on. But what if you add 1 extra long here? If you do like a 6 contracts, this is where we might spread these back out again. Look at that trade. You know, it's got a break even of 6,900. It's got great theta. It's got negative theta decay. There's no, this is a hedge. You know, if the market was to sell off 40% or 50%, this trade is making money. Not only is the IV expanding with this trade, like if it went to 5,500, this trade makes 60 grand. You know, and it's got positive decay. The problem is that it could lose 30,000 if it went to 7,100. You'd lose 16 grand if it went to 7,100. So have to have quite a bit of conviction. So how do we change this again? Well, we reduce the number of puts to the downside, or we increase the calls, or we move the calls over. Well, that was crazy. If I buy a 4th call, it's showing theoretically that this is a max loss. It costs 40,000 to put on this trade. These can be scary because if the volatility decreases, look, you have losses to either side. Yeah, don't get too crazy. I've done that before and it doesn't work out well. Things to think about, things of ways. So max loss still 35,000. Net debit of 38,000. It's hard to get into these trades, but that is one way to give yourself some extra longs, is to just buy an extra put as part of one of these trades, knowing that if the market goes down, the IV is going to expand, and this is going to be positive to the downside. If volatility goes up, these lose, and that can become a big loser right away. So you have to be directionally correct on those. All in one, I missed it. What are those indicators? There's something that I was watching, you know, there's all these people who are like, there's all these crazy services out there, people selling trading view indicators. And so you just, sadly, you can just go on, let me just pull it up here. Sadly, you can go on to Chat GPT, just like ask it to make indicators. And so this was somebody, some random person I was watching that sells these indicators for hundreds of dollars, and I just said, hey, like what is the base strategy of these? Because it's all the same info. Everybody's using the same thing. So this one is some sort of TTM squeeze, and you kind of have to, you know, play around with it, but you can get some base indicators. I'm not looking to trade these. I'm just looking at it from an overall direction. So those paid indicators, if you want to spend a couple $100, and those ones are designed very specifically for entry. And what people have done is they've spent a lot of money on the back end, and they've said, hey, we're gonna build this out, and people can follow it along, or they can link their trading view to their account and let an algo trade it. Totally worth it if they work. But for me, what I'm doing is I'm a range trader. So I'm just looking for where's the range? What kind of indicators can we put on that seem to be kind of useful? You know, and we see that repeatedly. We see when this is a cluster of green, we see that there's moves, they're happening to the upside. Like there are no red arrows in here saying sell, 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 sell. And until the market actually starts going down. And we actually see this band too, that's part of it. This kind of greeny colored, yellowy colored background is also showing that this is the momentum that's happening. So if we look at something like Costco, you'll see that it's in that trend. If this starts to all of a sudden show red indicators, and then this background changes color, I'll be like, whoa, wait a second, there's a sentiment shift. And you can see that here. So if we look at this zone, green, 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 still in the green, but then we started to get red, and look at what happened. Like these are past indicators that are happening, but they're actually projecting a potential move. Now it's not always right. We're just looking for overall trend. And then this green started to appear here, and they're like, whoa, this really happened, you know? So we're overall, what is the trend? But I'm using lots of different things. There's, again, VWAP here. We see this range. So as this green gets up to the top, I start looking at this and saying, you know what? Although the indicators are showing this, my range on Costco might look like this. You know, that, and as I'm forward moving from this position, what would I do? I'm looking at like a projected cone that looks kind of like this. And then I pick my expiration date, and I say I'm doing April. I put my vertical line in here. I go like vertical line, and then I draw some horizontal lines in here, and that might be my target there. So I can erase all this, and I can say, okay, now I'm going to build a trade here, and can I make some money off of Costco trading in this? We're past earnings, April 22nd. This is $1,043 right here, this green line I've drawn. What if I bring this down to like 1,000 level? Is that too tight? Yeah, that's way too tight. So here's the top of this band, 1,000, around 1,035. And then on the lower side, I want to get as tight as possible so I can make some money. Might go up here. We've got some support down here at 940. So this is where I might look at a trade, 1035 to 940. And then we go out and we try to build that out. So let's look at how I might do that with Costco. So Costco, if it moves down, the volatility will expand. Implied volatility right now is only 21%. So if I look at Costco, this might be a time where I might do a double diagonal. Where are my break-evens? 968 and 1,022. These are pretty darn close right off the bat. This is March 27th, April 2nd. So I can drag this out and say, let's go out to like June. Let's go to April, give ourselves some time. I've got break-evens at 1043 and 962. So these puts are maybe a little bit too aggressive. I'm just gonna move these over. There we go. Now I've got a break-even at 942 and 1035. That's looking pretty good. Might even go a little bit further. 1031, 912. I've gone a little bit too far. So 930, 940, max loss is $4,000. This costs a net debit of 3,200. If the volatility drops, if Costco keeps going up, this trade is going to lose. So I have to be a little bit careful about how big I'm putting these on. But those are the types of trades. Like this type of trade has short delta, has a break even, 927 to 1033. We've got positive decay. This is a pretty decent trade. This basically shows that if the volatility doesn't change, or if it stays that elevated level, this trade is just going to make some money over time. It's got a lot of downside protection, and because it's a diagonal, it benefits from this move to the downside. If the volatility expands, watch where these levels go. This is 4,000 right here, 4,000. If the volatility expands, it's still a loss. I'm not saying that you're not losing. If the Costco dropped to 820, I mean, you can't just trade neutral and expect that you're not going to lose. If the stock moves, has a 20% drop, you know, there's risk to both sides of this. But these are highly probable trades that this would make money. We have to watch our volatility though. Volatility contracts, these drop. If we're not worried about volatility contraction, if we don't want to play Vega, then we do it with condors. Whereas I haven't been trading. I've been trading condors just this week, but let's look at the range. And then here's that 950. So we're looking at April 17th again, 940. We wanted our break even around that 930 level in 1034. This is a perfectly fine trade. This doesn't care what volatility does. Look, doesn't adjust it at all. Volatility adjusts the internal curve, but not the external. We don't see an increase because the risk is defined. We do defined risk trades in high volatility. We do undefined risk trades in low volatility, or volatility that could expand or stay high. So I like double diagonals. They're great. Are they the be all end all? No. This trade is likely very, very good. We've got a net credit in 965. We've got a max loss of 1,500. The volatility is high enough. This is probably my preferred trade on a stock like Costco right now. So I could go back to my chart and I could look and say, you know, that 928 level and then that 1032 level. Oops. What am I doing? Take a little screen grab of that. Nice little trade setup. Okay, what else? Let's look at it. Iran, yeah, perfect. Thank you for Lori for just dumping in a bunch of trades. Let's look at all of those. Let's look in Mumu for a minute. Let's look at Iran. Actually, why am I doing this? Let's not look in Mumu. Let's look on TradingView. Have Iran on my list? Should. Where's Iran trading today? Boy, there's you could like between 40 and 44, Iran's just been pumping through this range, right? We talk about consolidation. Like every time it drops down to this 40 level, just buy and then sell at 44. It seems to be like a killer trade. Did we make it up here yesterday? Yeah, 44.91 yesterday. So would have done it again. Like repeatedly can do that trade around that $40 entry. So it's been hitting it so often. So you could have been in, out, in, and then out, in, and then out. Like I have 4 times in this month, in the last 30 days, 4 times that trade is like triggered. What do I think is going to happen with Iran? I'd be worried about downside risk. I actually took off my exposure. We're right around VWAP. Limited loss trades for sure. Double calendars might work. I almost want to just play this directional. I just want to like go long and, they're expanding. They're spending so much money. This company is spending so much money expanding. When all that stuff comes online with the AI, if they're able to profit from some of their expansion, it'll be killer. The stock price, I think, is way overpriced. So, there's a, value trap that you have to worry about there. I wouldn't be buying them to hold them. I think it's a swing trade there. Rocket Lab, I like quite a bit, but I've been not playing. So let me pull it up. Rocket Lab. I have not been playing the Rocket Lab as of late because we saw this big run up. And again, so here's that Bollinger Band trade. That's an actual indicator that's like one of the trading view basic trades. You can put this on. It's and it will typically show when it's hitting the Bollinger Band. So if I didn't, well, the Bollinger Bands are on, but again, consolidation. So if I was playing this, I'd be watching my break even at this 55, this VWAP level. That's where I would be. I would not be trading anything that didn't have a break even higher than that. And that's kind of how I would look at that. So I would say there's my range between 90 and 55. That's a massive, massive range. We can obviously play tighter than that, but I'd be more concerned about my downside risk than anything. Playing a put ratio or like a big butterfly down here, maybe just putting a cheap butterfly around that 55 level could work out very well. So let's go see how much a butterfly costs on Rocket Lab. So if we went to build and we did let's just do a put butterfly and we go to April and we're like 50 bucks. It's 10 to 1 risk to reward on this type of trade. So that's at the 70. I want to move all of this down. So let's go 50, 55, and then 60. So this costs $22 to get 477 bucks. That is a huge risk to reward. These trades can pay off massively, but they have a potential downside as well. To offset them, to make them kind of free, you have to add some risk somewhere. These can work really well. This is like, look at this risk to reward. Max loss is 200, max profit is 500. It's basically free to get into this. So if a Rocket Lab goes up, we're not worried. This can function as a hedge, but it only functions as a hedge down to that $50 range. So, you got to play with caution. The bigger amount of money you're playing with, the bigger you might play with to the downside. One of the trades that I really like let's look at this broken wing condor, which basically in a huge sell-off makes 191 bucks, has this profit 10, a max loss or max profit of 891 and a max loss of 100 bucks. If you add one more contract to this, so now you're short 3. These, if you can get in this for this is still a credit debit to open. This isn't quite the right setup. But when you're playing with these, that break even is at 50 bucks and it's got a huge profit 10 here. So can we just adjust this a little bit? Can we play with this trade and see where we can get that 55? But what I want to do is open for a big enough credit that it makes sense. This one isn't quite there. So yeah, how do we spread this off? We add maybe another spread. We increase part of this trade. So we add a little bit of risk. So go here. So now it's a credit, max profit of $1,000, max loss of $6,900, which means I'm buying the stock and paying $69 per share. That's the worst that could happen. Net credit is $93. This is not nothing. This is on a $6,900 trade, making 93 bucks on total risk is a relatively good return. If you did that all year, if you were able to do this every 30 days, this trade would make $600 on a $6,900 max loss. That's if it doesn't fall in the 10. You could make $1,000 right away. This is like a 15% up to a 15% return. These are the types of trades I like. This 131. This ends up being a 142. But like using a butterfly in that way. Let's just take off that one short put. Let's just look at what the butterfly is doing. What is it in particular doing? You got $1,000 in risk on here. So how much do I get here? This is $100. Maybe this is the better trade. Can we, again, trying to get a credit that's decent. This is only a $10 credit. But what I could do is I could enter this trade as like a limit order, and I could actually put this on at like $100 limit order. And if I did that as a $100 limit order, instead of this trade, watch what'll happen if we go here. if this market was to sell off, this trade would lose $100 if the stock dropped to 69 bucks. So if I set my credit to open this trade at $100, I won't even get into the trade unless the stock drops to 69 bucks. So we have to have a big move to the downside, which could happen tomorrow. And then I could be entering that trade at a good value. Doesn't matter, you know, maybe I don't want to take it right now. Maybe I want to take it if it's dropping down. That's another way to think about these trades. You know, don't necessarily be opening them for net credit. If you did that all the time, there's plenty of times where the stocks pull back and you go, wow, I got a way better entry. I want to make 60 bucks to enter this. Max loss is 6,000, so I want to make at least 1%. Just put a good to cancel order at 60 bucks. I'm not telling you what to do, obviously. That's just what I'm doing, what I would do. Starbucks. Let's NBS. Okay. Anna does cat ears. Yeah, I love. I don't remember what we're talking about. What has cat ears? Let's look at SNDK. I think SNDK is overbought, but they're way up there, aren't they? I made a killing. That was part of my January return was SNDK. I went long on January 2nd. I went long SNDK. And then I got out February 2nd right here. That was for those of you who are in my trading group, that was the entry and exit on SanDisk. I couldn't have done it better, I don't think. That was an excellent trade. My feeling on this, VWAP being down here, point of control being around 620. There's lots of up. The trend is definitely to the upside, green. But using my other indicators, looking at these, where it is in the cycle, being above point of control, being above VWAP, being at the very top of the Bollinger Bands, I think it's overbought. I would be playing this to the downside. This is where classic, just play like a calendar, like right at the 600 level. Let's see if we can build a little calendar like an April, May SanDisk calendar. SNDK, and let's see how much it costs. So April, let's go to build. We're going to do a put calendar. And then April, May, 710. Like, how much does the 600 cost? So it costs $27.90. If the implied volatility is 98, which is huge, massively high, it could reduce from there, resulting in a small loss. But this has got slightly positive decay. Maybe I don't go for that whole move. Maybe I go up here and I look for like the 620. I want to be somewhere where I think I can make some money. This makes money between 711 and 708 without any IV expansion. And then if the IV, let me just lengthen up this range. If the IV expands, which it's already at 98, if the IV expands, this gets even wider. But this type of trade is already positive delta to open. So I like it. That's how I would be trading SanDisk if I was looking to open a position right now. Be trading something like that. NBIS. Let's look at NBIS. That's a stock I never trade. Thanks for all the questions today. Wow, we're at 12:19 already. NBIS. I got a pork belly in. I'd show you guys pictures. It's starting to smell really good. NBIS. Holy. Okay, so I don't even know what this company has. Trend is to the upside. Looks too volatile for me. But what are you guys trading? What's the trade on this? What do you? I would love to know. Lori, will you? Are you trading options on this? We're right close to the top of the Bollinger. Point of control is at 96 bucks. Currently trading at 113. So, you know, not surprising we pulled back from this level. But the question is, how far down do we pull back? I'd love to know what you're thinking. And Starbucks too, possibly Nathan's asking about. Let's look at Starbucks. I feel like I'm out of time. I can't really do any trades, but we'll just look at like market direction. Point of control is at $85. I've played Starbucks for years. It's become a little less volatile, but it's still volatile enough. You know what I like on Starbucks with something like this? I really like ratio spreads, just really simple put ratio spread. And what I might do is I might center that around like the 92 level. So my break even's below VWAP. I don't mind owning Starbucks if it drops below 89, but I play, as long as I get enough credit, I go out to April, like April 24th, and I put on a trade that has a break even around here. And then I do my vertical around the April 24th level, which is 30 days away. Let's push the right button, Levi. And then we'll do the horizontal here at VWAP. So that's my target range. And then I build a 1-to-3 or 1-to-2 ratio spread, put ratio spread with the profit 10 below. And that is like a easy trade. If the stock goes down, I don't mind owning Starbucks long-term. They're a good company. Option strat is great for showing your trade ideas. Thank you, Brian. I'm enjoying that. I've been playing with it a little bit more, so I'm glad that you guys are enjoying that as well. I'm probably gonna have to upgrade. I emailed them. If anybody's watching and knows anybody at Option Strat, I emailed them and said, hey, will you guys give me like a promo account? Will you like, I can promo it for you, but they neglected to respond to my emails. So it was like, I probably have to pay for it, which is like part of the thing about being a YouTuber is like I put in effort to do these things, and then I hope that I get to get, you know, little kickbacks and get some free things so that I can share it with the community. And but so far I haven't heard. So if anybody's knows anybody at Option Strat, send them an email and say, hey, check out Levi's stuff. He's great and he deserves a free account so that he can show you guys the probabilities and give back to the community, because that's what I'm trying to do. Lori, I've been selling cash secured puts and covered calls on all of those: IREN, Roblox, SanDisk, NBIS. Yeah, I can see why. I mean, those all have enough premium. The volatility is super high. I'm assuming you're doing that on even more. As long as they're good companies, it's great. And you know, that's just part of why I'm like doing those trends and those indicators, trying to add a few more things. Easy Money's asking about TMDX. That's something I don't know. What is TMDX? What do they do? I should know. That's always embarrassing when I say something like that. I'm like, what is TMDX? And then I look it up and I'm like, I know what that was. TMDX, Transmedic Group on the NASDAQ. No idea. What do? They sell some sort of product. So point of control's around 132. Got a long Bollinger Band signal. We're in this green uptrend, lots of green arrows. Recently, this red arrow. Again, I would, depending, it's 100, you know, I look at this kind of thing, it's $13,000 position. So depending on account size, I would obviously do a little more research. I would look at this large node that's down here. It's disappeared here, but if you look at the visible range volume profile, you can see there's a large node of value here around that 85 mark. Let's see exactly where it is. So that was back in March of last year. Obviously, the company's been trading. Well, a nice range. Nice range. I like this. I like this kind of trade where we see enough volatility, enough trend. We're seeing it just like trade sideways. Like for neutral traders, this is ideal. Is there enough premium in here? What are you trading, Easy Money? What are you doing on these? Are you doing double diagonals or do you just do like cash secured puts and ratio spreads? I would assume that's the kind of trade. And depending on what it is, Transmedics Group, I mean, if they have some sort of product that could take off, I don't like to short medical companies typically. So, you know, I don't mind shorting. It's crazy. I don't mind shorting the NASDAQ or SPY, but I worry about trading individual companies and having a short, short calls. So limited loss call spreads I would do on the upside. TMDX and then CCL. What is CCL doing lately? I used to work for Princess way back when, which is a Carnival company. Wow, they've come down $23. Right at the bottom of the Bollinger. So the trend is down. Just looking, $28. Yeah, I like it. That is, again, I feel like they're like for value hunting. If we're looking for things, I would do a little bit more due diligence on these. I would look at like, so CCL, and then I would look at, Carnival, buy, profitability A+, fair value 30. Yeah, Just selling like at the money put, like, is that crazy at that level? Even in the money put, like, what if, let's look at something on CCL. How much money can we get? Build. So this is the put spread. Because it's so small. What if this collects 273 bucks, sell 3 of the 25s in April and buy 1 just for kicks on the, this has a $4,000 max loss and basically a 10% return in a month if the stock stays above $25. I can make a little bit less than that, but if you like look at the table view of this, you know, it's huge. You know, these are huge returns. If the stock dropped to 20 bucks, down 571. Yeah, thanks for bringing this one up. I very much appreciate when you guys bring up stocks that I maybe haven't been looking at, but I like that. I like that setup. Buy the 1 calendar just as protection, and then just sell 2 at the money puts. Like, just kind of keep it simple, stupid. Knowing that what's happening with that put calendar is that it's making money if it stays at this level. So the calendar itself has a huge range, right? From $11. So even just selling 1 of these, I mean, to max loss is $2,000. Net credit is 111. I would take it to the upside though. So that's kind of how I would trade it. Break even's 23.25. Stock's already trading it at 25.26. It's already at the bottom side of its band. So let me screen grab this as well. I'm gonna have to get off if I'm gonna do some trades. It's 12:28. You guys are great. Thanks so much. The cat ears was referencing the double diagonal graph and options chat. Yeah, I love cat ears too. It was long calls. Well, you're just doing long calls. Good for you. Wow. I rarely do. I do like long call setups so rarely, and I often do them as like a 2x3. Like I'll sell 2 calls at the money, and then I'll buy 3 calls. That's kind of how I take it. I've never had good luck with that. I want to change that though. Maybe I should get into that meditation thing and like just know exactly this stock's going to go up. But the trade setup that I just showed you, selling 3 at the money puts and then buying one put, just to kind of protect that little bit of down move, because I know that calendar will print money if there's a volatility expansion, if Carnival keeps dropping. Okay, you guys are amazing. I'm going to get out of here. Thank you so much. Go with my wife tonight. We're going separately. She's doing that. I've got my stock traders meeting. We're picking stocks tonight. We've got like a basket. We've been outperforming the market collectively as a group for the last couple of months. It's been super fun. So it's something I've been organizing, and just like everybody picks a random stock and we hold it from meeting to meeting. So for 1 month we hold. This month we did 2% return, just over 2% return as of today. And when the SPY dropped 2% over that time. So we're massively outperforming the market. And if you guys don't have a local trading group, it is like the best thing that ever happened to me. I love doing this. This is fantastic. But like getting together with people and like passing phones around and actually looking at these trades is so fantastic. And I often hear people tell me, oh, I was in Kelowna last year. And I like, why did you not phone me? Like, I love drinking beer. I love talking about options. Phone me. I'll take you to one of my favorite restaurants. We'll go out for dinner. We'll have some beer. It'll be fantastic. I love the city I live in. I'm always up for chit-chatting with people, and it's a great experience. So yeah, you guys are fantastic. Thank you so much. Let's get rich together. That's what we're doing. I will see everybody back here next Tuesday. I will see my members on Thursday. I'm going to be in the Discord right now. I'm going to post some more trades. Let's get rich together. Take care, everybody.